This bank crisis is none of your concern. SVB, Silicon Valley Bank, the second largest bank failure in US history, you name it, you've heard it. Countless major YouTubers have covered this topic, and we're starting to believe that those videos are causing an unnecessary panic amongst us common folk. Is it for the love of the art of sensationalism? Is it the bandwagon tactic? We don't know. Safe to say that we're sure you've received your full dose of fear-mongering. Now come on over here and get fed a nice helping of bread and cheddar, where we talk about realistic ways to make that bread and stack that cheddar. Without further ado, here are 5 reasons why this bank crisis is none of your concern. Number 1. Most of us are normal. Simply put, most of us have normal jobs with normal salaries. Now, whether or not this is a fair salary is another conversation. But because of our income, most of us Americans have no more than $10,000 in the bank, if that. According to The Motley Fool, most Americans have $1,000 to $500,000 in savings, with the nation's median account balance being about $4,500. According to the Government Accountability Office, the GAO, as of 2022, more than 7 million households have no bank account at all. Why does this information even matter? Because of reason number 2. If you have less than $250,000 in your bank account, then you are covered. The Federal Deposit Insurance Corporation, better known as the FDIC, is an agency that was established by Congress after the Depression of 1929, when the market crash caused panic and mayhem, with millions of people rushing to withdraw their money from banks. This resulted in over 9,000 banks failing. The FDIC was then put into action via the Banking Act by President Franklin Roosevelt to reinstill confidence in the banking system. Eligible banks are now required to pay an insurance premium to the FDIC to protect monetary assets up to $250,000. So if you're under that benchmark, then consider yourself safe. Nearly all US banks are insured, but if you'd like to double check to see if your bank is covered, go to fdic.gov or call your bank. Number 3. You don't own a tech startup. Although nearly half of all US venture-backed tech startups are funded by SVB, less than 4% of the US population even works in the tech industry, let alone owns a startup with venture capital that so happens to come from SVB. Do you catch my drift? It may not seem this way given all of the primetime news coverage, but we are talking about a very niche group that is directly affected. And no need to worry about them, because President Biden has addressed the situation and is ensuring that all customers who have deposits in these banks are protected for the full amounts in their accounts, even if over $250,000 in this case. Therefore, these tech startups will still be able to make payroll to pay their employees. This emergency protection is not covered by taxpayers, so once again, none of our concern. Number 4. Only SVB investors need to worry. Do you remember 2021? So many of us became overnight investors due to the crypto and stock market rally. And so many of us lost money. Valuable lesson, and we do hope that none of you listening invested more than what you could afford to lose. But the same goes for Silicon Valley Bank investors. Most likely, you are not one of them, so take a sigh of relief. Investing is a risky game. If your bet goes bust, charge it to the game because it's a loss. And the government only bails out institutions if they believe that its downfall would cause a catastrophic economic collapse. In this case, sorry investors, but it will not. Welcome to capitalism. Number 5. Silicon Valley Bank collapse will only scare you if you allow it to scare you. Some people out there get a kick out of fear, uncertainty, and doubt, better known as FUD. They allow it to drive their decisions or lack thereof. But most of us want and need relief and a sense of hope and motivation. That's why Bread and Cheddar is here, serving up common dollars and common sense. Quick exercise. Close your eyes. Think of yourself as the CEO of you. Think of your mental and physical well-being as the headquarters, and if you don't take care of the structure, your empire would collapse. Think about the actions you take throughout the day to keep yourself afloat. Lastly, think of profits and losses as the positive and negative ideas that you allow to influence you. Whatever you do, do not allow negativity to ultimately result in a net loss in your life. You're in charge. We don't know about you, but after this video, we are no longer concerned with SVB. But I'll tell you what we are concerned about. This video right here. Check it out and subscribe, because it's good for you and free. Oh, yeah, you can open your eyes now.